Time now for an in-depth look at the market news this afternoon, and for that I'm joined on the line by Dr. Jun-sok, professor of economics at the Catholic University of Korea. Dr. Yang, thank you for making time today.
Happy to be here.
So as we just heard, the U.S. and China have announced their Phase 1 trade deal. We just got a rough overview of that, but the details of it are still largely unknown. What do you make of this trade deal?
Okay, well, first of all, we have to remember that this is the first stage deal, and it's what we used to call a small deal. So it doesn't deal with the major outstanding issues like China's industrial policy or their subsidies to state-owned enterprises. It just deals with very relatively simple issues, some cutback in tariffs, and the purchase of American agricultural goods by China. And then another factor that we should remember is that we're not going back to the pre-trade war days before President Trump's term began. We're partially setting it back, but we're still not back to where there was no trade war. So in a sense, I guess you can say that they're reloading their bullets. Some of the tariffs, as noted in the last report, has fallen, but they can always be raised again if China does not keep their promises, or if President Trump decides to use further tariffs for negotiation. It's also notable that while some tariffs have been cut on $120 billion worth products that was imposed on September. 25% tariffs on $250 billion worth of products still remain. So they still have a tariff on a lot of goods. And then the exact amount of how much China will purchase from the United States, that's also not clear. President Trump has mentioned $40 to $50 billion, but the highest amount that China ever imported from the United States was $26 billion in 2012. And there has been some speculation in U.S. press that if the number is really true, then the U.S. farmers or global markets cannot really absorb that much exports to China, that it will be very difficult for American farmers to produce enough agricultural goods by that amount to actually ship to China. So the numbers that are bandying about more often is about $20 billion. And then because there has been some provisions on intellectual property protection, technology transfer, financial services, and transparency for currency interventions. But still, because the major issues are still outstanding, I think there will be a temporary relief and perhaps ceasefire for a few weeks. But fundamentally, the uncertainty about China and the United States and the trade war, it really remains.
Understood. Well, because of this trade deal, stocks were up big time late last week, though on Wall Street not so much on Friday. What's the story there?
Okay, well, I think there's two stories. The one that's coming out in the U.S. press is that people were disappointed that there wasn't more to the deal than what it was. But I think if you were keeping up with the news, then you shouldn't really be surprised. I'm very somewhat disappointed by the U.S. stock market. I think they have been engaged in sort of irrational exuberance over every little possibility of good news coming out from the trade war, and a lot of times it has been disappointing. So I think they should have expected a somewhat small deal. But the U.S. press is saying that because the deal wasn't as big as a lot of people expected, that's one of the reasons why the stock market didn't do well in the United States on Friday. My own suspicion, though, is that maybe they're learning that you don't count the chickens before they're hatched, especially with President Trump. We had almost a trade deal last May, but it fell apart on the legal text writing phase. So perhaps they're waiting to see whether this time it'll be definitely signed.
Very interesting. Well, looking ahead this week, The Bank of Korea will release a report having to do with its inflation target of 2%. The government will also be announcing its economic policy direction for the new year. What should we be watching for this week?
Okay, well, those are the two big reports, and what we should be looking out for is what are the government's target growth rates for 2020? Will they still maintain the 2.3%? And not as important, but still interesting, will they still stick with 2.0% target growth, the line in the sand that the government set for 2019? And then on the price report, inflation report, will there be any lingering traces of possible deflation? I think that's the biggest factors that we're going to see, we need to worry about. And then some other statistics that are coming out, the corporate financial analysis and the report from the last Monetary Policy Commission meeting are coming out tomorrow from Bank of Korea. That should include some very interesting details on how Korean businesses are doing and how on the last meeting, what the Monetary Policy Commission's thoughts were on where the interest rates should go.
All right, Dr. Young, we'll have to get into all of that next time. Thanks so much for coming on. We appreciate it.
Thank you.